Welcome to another interesting edition of the Economy and Politics Show, where we discuss key developments in the economy as they affect the households. Today, we'll be looking at a very topical issue in the socio-economic space, which is the foreign exchange management in Nigeria. On the sidelines of the third quarterly 2021 Nigeria Economic Outlook Conference powered by Economic Associates, I engaged Dr. Muda Yusuf, an economist and former Director General of the Lagos Chamber of Commerce and Industry, on the topic FX management and Nigeria's economic stability. But before we bring you that conversation, let's take a look at the key economic updates from last week. President Muhammadu Buhari, in his capacity as Minister of Petroleum Resources, directed the incorporation of the Nigerian National Petroleum Company Limited. This is in consonance with Section 53, Subsection 1 of the Petroleum Industry Act 2021, which requires the Minister of Petroleum Resources to cause for the incorporation of the NNPC Limited within 6 months of the commencement of the Act, in consultation with the Minister of Finance on nominal shares of the company. Also last week, the Senate of the Federal Republic of Nigeria passed the 2022 to 2024 medium-term expenditure framework and fiscal strategy paper ahead of the expected presentation of the 2022 appropriation bill to the National Assembly by President Muhammadu Buhari. This is just as the President of the Senate, Dr. Ahmed Lawan, backed the continuous collection of the value-added tax by the federal government until the final judgment of the nation's apex court, the Supreme Court. The passage of the 2022 to 2024 medium-term expenditure framework was sequel to the considerations and deliberation of a report by the Joint Committee on Finance, Local and Foreign Debts, Banking, Insurance and Other Financial Institutions, Petroleum Resources Upstream, Downstream, Petroleum Sector and Gas. The Joint Committee report was presented by the Chairman of the Senate Committee on Finance, Senator Solomon Olamilekan Adiola. We go on a break, and when we return, we'll continue this conversation.
The ProShare mobile app, your non-stop access to financial and economic information. With the ProShare app, you can customize your preferred news and videos. You can also get access to latest financial and economic news. Watch videos related to business, economy, financial markets, and lots more. The ProShare app gives you in-depth market stats from the NSE, FMDQ, and NASD. That's not all. You also get real-time alerts. The ProShare mobile app. Information at your pace and in your space.
To those of you joining the Economy and Politics Show for today, we're discussing FX stability and the Nigerian economy. In this conversation, I asked about the CBN FX restrictions for 38 items and the impact it has on importers and the demand for foreign exchange given the spike in the rates at the parallel market. Take a listen to what Dr. Muda Yusuf said.
Well, they account for a sizable proportion of the demand for FX. Before now, they have been exerting some level of pressure on the parallel markets. But what has happened now is that even those that normally are legitimately qualified to be part of the official window, their demand cannot even be fully met at the official window. From the interaction I've had, the best that many of them were getting, just about 20-30% at best of their demand is being met at the official window. So there is now also a spillover by those who have access to the official window, a spillover to the parallel markets, in addition to those that have been excluded from the parallel market. We are talking of product groups of over 40 product groups. So the combination of these two have compounded the problem of the pressure on the parallel market. That is why this disparity has continued to grow. And that is why we are seeing this very serious depreciation. Of course, there are also issues as to the pricing of the exchange rate itself. I'm talking about the fixing of the rate at the official window. The fixing of the rate at the official window has created an additional pressure from speculators, from people who are just in the market to take advantage of arbitrage. These are people who ordinarily shouldn't be in the foreign exchange market. But because there is an arbitrage opportunity, a lot of them are there. And the unfortunate thing is that many of them are also people of influence. So it's even much easier for them to access these funds even more than the real economic players. So that is also compounding the problem. The pricing problem is also creating issues on the supply side, because quite a number of inflows that normally should come in are not willing to come in at the official rate, because the official rate is not perceived, and rightly so, as a market rate. Because right now we are dealing with a premium of over close to 40% premium, as against the best practice of just about 5% premium between the official window and the parallel market window. So the current position of the central bank, as far as the rate fixing is concerned, is also creating a supply side problem. So we now have a kind of double whammy. We have the challenge of pressure of people seeking premium opportunities on the demand side. We have the challenge of obstruction to supply because of the rates that have been fixed far below what is supposed to be the market rate. So that is why the crisis is as bad as it is.
Now, based on the current foreign exchange ban in terms of supply to the Bureau d'Exchange firms by Central Bank of Nigeria, the issues of market manipulation and rent-seeking were identified by the Central Bank of Nigeria as part of the reasons why they took that decision. I was curious to know how this will affect the foreign exchange markets.
The BDCs are the closest to the SME segment. They are the closest to the informal sector segment. And these two segments are very big players in this economy. They account for well over 50% of our GDP. Now, the retail transactions have been moved from the BDCs to the banks. And we all saw what has happened to the rates. Of course, the banks are not as accessible to these key players as the BDCs. So there has been a kind of constriction, problem of access, problem of documentation and all of that. That has been created now, at the banking end. Because the banks are not so much configured or structured to be dealing with all these retail transactions. So that has again further compounded the problem. So I think what should happen if the CBN is not willing to continue with the BDCs is to see how we can further liberalize the market and give the BDCs a broader space to be able to source independently foreign exchange. We have foreign exchange coming from foreign direct investors. We have foreign exchange coming from the portfolio investors. We have foreign exchange coming from export proceeds, from the diasporas, from exporters, from the oil companies, and all of that. So if you can look at all these windows and just allow the BDCs access to some of these windows, so that on their own, they can also source foreign exchange and they can be monitored. So that I think is what should happen. I'm not necessarily particular about the CBN selling directly to them, but you create an environment for them to be able to access, through other windows.
Now, considering the foreign exchange demand management approach, I got Dr. Muda Yusuf to share his perspective on this framework so far by the Nigerian Monetary Authority.
Much of the crises we are witnessing today are self-inflicted. They are policy-inflicted crises because of the concentration on the demand management of the foreign exchange markets. My submission is that a market-based approach is a much better approach. It's a more sustainable approach. It gives a lot more transparency. It is more predictable. And it is better even for the sentiment of investors than a fixed approach, a regime of administrative allocation and over-concentration on demand management. A market-based approach is much better.
One major concern for me was if the adoption of the I and EFX window has led to an overvalued naira. Here's what the economist had to say.
The I&E window currently at the current rate of 412, we can say that the naira is overvalued. I mean that the rate, of course, is not market reflective, at least from what we can see. Because if that was truly a market, I'm talking of the NAFEX window, you should be able to go there and pick up whatever amount of demand of FX that you require. But you go there now, you get maybe just 20% of your demand. That is not a market. That's a rationing platform. And if you allow the market to play a much better role, of course, we see an adjustment that will bring the rate slightly above that, maybe to 450 or somewhere around that, if you have a proper adjustment. Because if you allow a bigger room for the market, we are likely to see some level of adjustment, both on the demand side and on the supply side, which will bring us close to some equilibrium level, which ideally is likely to be far, far below the 500 mark.
In the final part of this conversation, I probed to understand if the demand for foreign exchange in Nigeria is price elastic, and Dr. Muda Yusuf gave his view on this.
If you allow the market to determine rates, the rate is likely to go up. If it goes up, the premium will reduce. If the premium reduces, the demand will reduce. Because there are a whole lot of people in that market who are just premium seekers. They are rent seekers. They don't have any business in the market. But because you have created a very robust and juicy, attractive premium, that is why they're there. So if there is some adjustment in price, we are likely to see a drop in demand, and we are likely to see an increase in supply, which will also impact positively on the rates.
Dr. Muda Yusuf is very clear and has been consistent on the need for Nigeria to adopt a market-determined exchange rate framework. This is a huge debate, as there is another school of thought that believes that the managed FX floating regime still remains the best approach for Nigeria. In all, there is need for an allied consensus on how the foreign exchange market can work effectively while for a productive Nigerian economy. That will be all for this edition of the Economy and Politics Show. If you have questions, comments, or suggestions on the foreign exchange management and Nigeria's economic stability, which is a major topic of concern now, please send them to otoabasi.apasekong@proshenji.com. Also, join our website www.proshenji.com to read our latest news, articles, stories, and reports on the foreign exchange markets. You can engage with us via our social media platforms displayed on the screen. Till we come your way again, thank you for watching and have a nice day.